Let's look at this example here. It's adapted from IEB November 2018. Almost all examples that relate to grade 11 and 12 notes are adapted from a past papers, just there at times I forget to write it there. Now it says in the limited sales mountain bikes, they apply a markup of 50% on all their sales. Then they gave us an extract from the financial statement as at 28th of February 2024, 22, before the adjustments below. So the adjustments that come after this table were not taken into account. And now we have adjustments and additional information that has not been taken into account. Now it says here a cash customer, if I know that the question paper says Nigiri. No, it's not Nigiri. It's supposed to be Ngiri. All right. F Ngiri bought a mountain bike for 21,000, but has not been completely happy with it. So we know that F Ngiri was not happy with whatever he bought from us. Remember, we are in Dev. Dev. I wonder what that in Dev stands for. And then they said Endeavor Limited have agreed to take back the bike and give him a full refund as he has only had it for a week. So we're gonna take it back. So that's they're simply telling you that we are approving the return of those goods. So we're taking the debit note, we're issuing the credit note. Credit note, debit note is just for the return of goods. Okay. And then they tell you that no entries have been made to record the return of the bike. Note that we are not just taking the goods, we are actually, what we're simply doing here, we are actually going to refund F Ngidi. F Ngidi is a cash customer, not a credit customer, but a cash customer. We are going to refund him his money back, which is that 21,000. But that 21,000, you already know that just by that return, it affects all accounts, in total. It affects sales, but in this case, obviously, we can't debit sales. When goods are returned, instead of reducing sales directly, we debit debtors allowances. And then we are going to credit. I know you're tempted to say we are going to credit debtors control. No, we are crediting bank because we are giving them their money back. Okay, so in essence, this transaction was supposed to be recorded in the CPJ. Since we are making a refund, we are paying the customer back. I hope you're together. Okay. Let's start with, because this is how it works, guys. It starts with the source document, then the journal, then the general ledger, then the closing transfers, then, closing transfers come with the general journal, and then we prepare the financial statements. That is how accounting goes. It starts with the source document, journal, general ledger, and then financial statements. And that's what I've been doing with all my videos. I'm simply showing you a full accounting cycle of each transaction, where it started and where it ends. And that's what I will continue doing right now. I'm going to debit debtors allowances by the selling price, simply a reduction of sales, and then credit bank by 21,000 because we are paying the customer back their money. And then whatever affects sales also affects cost of sales. In this case, cost of sales must decrease, but it decreases on the credit side because it's an expense. When it increases, it only increases when goods are sold, and it increases at cost price. So it makes sense that when goods are returned to us, it should decrease, but it will decrease on the credit side. But this customer, when whenever they returned those goods, we will debit trading stock at cost price and credit cost of sales. We good? That's it. We're done. The next thing, I'm going to go back to the question, and I just want to show you guys something there. You'll realize that already we've got debtors allowances amounting to 66,000. Now, note that after what we have just processed, our debtors allowance is no longer sitting at 66,000. It is now sitting at 66,000 plus 21,000, which will give us 87,000. Let me just confirm. Yes, 87,000. Okay. So we need to close this off against sales. I spoke about closing off against sales, so we need to reduce it directly from our sales. So I'm going to go to sales, decrease sales by debiting it, and simply decrease debtors allowance. So for debtors allowances now, I will be having 0. So I took all my debtors allowances and I closed them off against sales. So now I'm just left with what we refer to as net sales. Net sales is your total sales minus all the returns by customers for the year. And then whatever I have as a balance in my sales account, and I will simply go back to, well, I will explain this. But when you look at your statement of profit or loss, you'll realize that you were given a sales figure, which is 3,234,000. Obviously, that sales figure was reduced by this 87,000. So when I take 3,234,000 and I minus 87,000, I'll be left with 3,147,000. That 3,147,000, which is net sales, I'm going to take it out of my sales account and transfer it to what we refer to as the trading account. I'm simply going to transfer it to the trading account. Before making any assumptions, I just want to go straight to my statement of profit or loss. This was already given to you in the statement of profit or loss. I'm just going to check how much do we have as a sales figure there. There it is. The sales figure is 3,321,000. It's 3,321,000. That is a sales figure. So what I need to do now is to reduce that by 87,000. 3,321,000 minus 87,000, which is my debtors allowances. It will give me 3,234,000. 3,234,000. All right, it cannot be net sales. It should be sales. Because when you say net sales, it means that debtors allowances has been deducted already. In this case, it has not been deducted yet. So that is the sales figure, which is 3,321,000 minus 87,000. It will give you 3,234,000. So that is the net sales figure. So that net sales figure, you need to take it out of your sales account and put it into another account, which we refer to as a trading account. Now, someone might be asking me, what is a trading account? It is just a valuation account that helps us calculate gross profit, and you will learn about it now, later, just in a moment. So I'm simply going to create trading account, meaning that whatever I have as net sales, I'm going to put it on the credit side of my trading account, and that is a closing transfer. And similarly, with my net cost of sales, I'm simply going to take my net cost of sales and put it on the debit side of trading account. Remember, cost of sales will increase on the debit side. So when it decreases, it will decrease on the credit side. And let me just confirm with you how I got that 2,200,000. I went to my statement of profit or loss. Cost of sales there was given as 2,214,000. So I took 2,214,000 and I subtracted cost of goods that were returned. Remember, the cost of goods returned will reduce cost of sales, which was 14,000. And that's how I got that 2,200,000. So that 2,200,000, I'm going to take the whole amount out of cost of sales and put it on the debit side of trading account. If you've been paying attention, you will note that in your trading account, on the credit side, you have a net sales figure of 3,234,000. And on the debit side, you have cost of sales of 2,200,000. We'll get to that later on. But by now, you should have seen that. Now, I'm just going to start with my bank. Bank balance was 700,000, which was given to you. I'm going to reduce that by what we need to pay Mr. Ngidi in this case, which is 678,000 will be the cash that we still have in our bank after deducting that 21,000. We'll start the new financial year with that 678. Trading stock, when you look at what we have in the trial balance, our trading stock was 185,000. Did it go up or down? It went up by the cost price of goods that we returned, remember? What is the cost price of those goods that we returned? It was 14,000. So it went up by 14,000. That's why our balance carried out it's 190. So in this case, our totals on both sides will simply be 199, not 119, 199,000. And that will be the balance of trading stock we have at the beginning of the new financial year. Then we're going to go to debtors allowances. The balance of our debtors allowances was 66,000. Now this will be increased by the new debtors allowance, which was 21,000, taking your debtors allowance in total to 87,000. And that will be what you closed off against sales. So you will have nothing under debtors allowances. You'll just have zero because the total that you had was taken straight to sales, and it will be on the debit side of sales. We'll get to that shortly. Cost of sales, on the other hand, was sitting at 2,214,000. You need to reduce it by the cost price of goods that were returned, leaving you with cost of sales of 2,200,000, and that will be taken straight to trading account. We spoke about this earlier on. So since it's on the credit side of cost of sales, it will be on the debit side of trading account. Now for sales. Sales was 3,321,000. We need to reduce it by a total of debtors allowances, which is 87,000. Whatever balance we get will go to trading account. And there is trading account. We're going to get to it shortly. So trading account, on the credit side of your trading account, it will never change. It will always be this way. You will simply have sales. And on the debit side, you will have cost of sales. It's net sales. On the debit side, there will be net cost of sales. the balancing figure, you will take it to profit or loss. That balancing figure, we normally refer to it as the gross profit. So your gross profit will be 1,034,000, and there will be nothing under trading account. That's it. Now we're going to go to our financial statement. I'll start with the statement of profit or loss. This was a credit note, debit note. So we will take sales minus debtors allowances that were given to you in the trial balance and minus debtors allowances that was in the adjustment. It will give you your net sales of 3,234,000 from a cost of sales. So that's 66,000. Guys, if you listened carefully in the first video when I explained what was happening with the debtors allowances, you will remember I said for debtors allowances that I pay in the trial balance, there is no cost of sales. I had so many students that calculated cost of sales of that 66,000 and they subtracted it from 2,214,000. When you do that, you are subtracting it twice. The fact that it was there in the trial balance, it means that all the transactions were recorded. So all you have to do is just to close it off against sales. That's all you do. But with that 21,000, it was not recorded. Therefore, we will need to subtract the cost price of that 21,000 from the cost of sales. In this case, it will be 14,000, and your net cost of sales will be 2,200,000. Take a sales figure of 3,234,000 minus cost of sales of 2,200,000. You will have 1,034,000. Under inventory, you will have that 185, you add the 14,000 that was returned by Efengidi, and that will give you 199,000. We will have what we refer to as cash and cash equivalents. Well, it just jumped. Let me just go back to it. Back to it, it will be that bank balance that was given to you at the beginning, well, at the end of the year, which was 700,000. It was incorrect because we needed to make a payment to Efengidi of 21,000. So in the bank at the moment, we're just left with 679,000. Now I can go to example 2. Try example 2. You need to prepare the general journal and everything else. Okay? Check out the next video for solutions.